Just on the subject of banks, there was a rueful comment from the CEO of David Jones, Paul Zara, this week. He said, we know where the money is, the banks have it. So it's extraordinary, isn't it? The bank debate just keeps going on, and we have politicians getting stuck into them, which we'll talk about a bit later. But what did you think of where the Commonwealth Bank came out this week with its result? Such a contrast to Qantas too, I suppose.
Well, I thought the CBA result was fantastic. I mean, it was good. And historically, it's clear that they're doing very well, notwithstanding the fact that the new loans, as you pointed out, aren't actually making them much money. I mean, get this, the ANZ did a funding round just a few days ago. It was priced at 7%. That same ANZ is offering 3-year money at just below 6% at the moment, and I wonder how long that can last. And I guess the other issue is, he said, well, if revenues grow, then we'll be able to keep the staffing costs basically level. Well, what if revenues don't grow or possibly even shrink, which is not an impossibility? That says to me that there's going to be more cost-cutting at the banks. So the future's not looking perhaps as good as the past.
But, you know, it looks like Commonwealth Bank is at least approaching that holy grail of banking, which is getting their staff to cross-sell a lot more of the suite of products that they have, which is what, you know, bank executives have been talking about this for approximately, I don't know, 15 years or so. The trend is going in the right direction for Narev, and that's what he was referring to, I think, when he's talking about more productivity in the existing employee base.
But still, I mean, the bread and butter of banks is still writing loans, and you know, we've seen this huge escalation in debt to GDP here in Australia, and you think it's got to go sideways or down. I mean, we've had 20 years of banks effectively being a GDP plus growth sector, with credit growth running way above income growth. And, you know, the best case is it flatlines. If it starts to shrink, then you're all fighting over a smaller pie. You've
been doing some work on financial sector profits around the world and producing some very interesting graphs on that subject, Jared. Tell us a bit about what's been going on just in global financial sector earnings.
Well, look, we've had this huge global escalation in debt, and the biggest winners from it were the debt peddlers. In most places, we've seen banking sector profits as a share of GDP double or triple or quadruple in most Western economies. And Australia's not that different. I mean, here, finance sector profits, you know, in the 70s, 80s, tended to be around 1% of GDP. Now it's 3%. And of course, this is one of the great paradoxes. You want a strong banking system, that goes hand in hand with being a profitable banking system. As soon as you get too profitable, someone comes along and clonks you on the head.
The other interesting point you made, if I may, just...
this is going to be pointed, isn't it?
No. Well, it was interesting because you've made the point, not only did... I'm just trying to remember now, financial sector profits grew at about 2 or 3 times the rest of the corporate world, but financial sector wages grew at double
it was pretty good being a bank. It was even better working for a bank for 20 years.
Saying.
Exactly right. And, I mean, I think that super cycle's over also, unfortunately, and I mean, this is part of it. But it's more high finance, I think, where the big bonuses are something of the past.
Well, there's fewer people working for not only banks but investment banks.
No, that's right.
Jared, don't you think it's bizarre, though, and this is what I can't understand, maybe it's a corporate version of the tall poppy syndrome. Here in Australia, you know, if you're losing money in your overseas owned, like, say, General Motors Holden, for example, the government turns up and says, please, please, please keep doing business here, here's some money, etc., etc. But if you're a domestic, profitable, world-class operation like the Commonwealth Bank, you get pilloried by that same government. I find that very, very odd.
It is odd in the politics. We can explain the politics, but I think what's peculiar about a bank is no other industry has a backstop to prevent it going under. And the only way the banks generate these ROEs is by being so levered. Well, the only way you can be so levered is you can access the Reserve Bank.
There's another massive structural advantage that they have in Australia, which is there's 4 big banks, and you know they're dominating the market, and it's an oligopoly. And there's a reason why CBA and the other banks compare this market to Canada and say, well, the ROE is okay, it's the same across both countries. That's because Canada's got a very similar structure, and perhaps that's where ROE should be. I mean, if we want to have a safe banking system, it has to be very profitable.
Well, so just speaking of the political pressures, and what I said was in that interview, the hypocrisy. Here's Julia Gillard on the ANZ in Question Time this week.
Putting your interest rates up, then announcing job losses and then seeking to blame it on someone else, both of those decisions on someone else, is reprehensible.
Reprehensible? Do we think that?
Well, Gerard, you said that no one else has that backstop. Again, I'd go back to the car industry. I mean, it gets bailed out all the time. In fact, it wouldn't even exist in this country without a permanent backstop from the government.
No, I mean, no argument there. Yeah. It's dumb that we do that. But, I mean, the banks had a great financial crisis. I mean, it wiped out the securitisers. They were allowed to gobble up the second-tier banks, and it's entrenched their position, entrenched the oligopoly. And my point simply is the high returns are in large part because of a special backstop that's hidden. It's not like a cash payout to General Motors. And my view is that there should be some sort of supernormal tax for them.
Well, I just think that you contrast that with America at the moment. I was there last year and I'm going back again soon. And there the US Fed is pumping money into the corporate banks, onto their balance sheets, but they're simply not lending it. So I guess what do you want? Is it better off to have banks that are profitable and at least keeping the economy going? Or in Europe or America, they've just come to a standstill. They're just pumping up their balance sheets. They're not lending money. As a result, the economies are stalling.
And that's exactly... Did you hear that? Jared says they ought to be a back tax. Super bank tax.
Well,
you just slipped that in there. We just
he threw it in.
We can't let that pass.
Straight in the middle. Well, I'm sure this government's looked at that. I like to think that they would reject such a thing. I mean, in fact, they have. What they've said is we're going to try and generate more competition domestically. We're going to, try and reinvigorate the mortgage securitisation market. Now, that's not going so well at the moment. I mean, it's pretty hard for even well-rated banks to borrow money offshore. But I mean, that's where the policy changes should be in, trying to make a more competitive structure rather than imposing a big tax on the whole sector.
And the further question is the extent to which the banks are responsible for their own problems. There was an interesting statement by Guy Debelle from the Reserve Bank this week in a speech where he was talking about Europe's effects on the Australian financial markets, and his conclusion was actually pretty blunt.
So there are known unknowns and there are unknown unknowns, as obviously Rumsfeld said, which complicate the pricing of risk. But over the past decade, there's also been a fair few examples of too lazy to be knowns. So European sovereign debt seems to me to fall right into that category. So while mispricing due to night and uncertainty is excusable, mispricing due to laziness is not.
Well, how much mispricing was due to laziness, do you think?
Oh, there's a laundry list of reasons behind the mispricing. The mispricing is without a doubt, but I mean, you had greed, you had some people believing their own hype, and you had outright laziness and short-termism. So there's a whole list of factors. What we know is we saw unprecedented credit mispricing, and Europe was a classic case. I mean, the markets ending up saying Greece is as good a credit as Germany. Well, guess what? It wasn't.